Prepare to explore Tesla's financial universe with this examination. In the next weeks and months, you'll learn all the important top-secret information regarding how Tesla will perform. Tesla generated almost $4 billion in net income and nearly $25 billion in revenue, but a sharp decline in vehicle pricing caused a decline in the company's net margin. What's going to happen to the stock price of the company? With the stock price between $240 and $250 a share, it might possibly achieve a high P/E ratio of 60 in a bull market. However, if the market goes negative, the share price of the stock might drop below $163. According to our expert, Q4 revenue will nearly surpass $30 billion, and the company's P/E ratio will be between 50 and 60 in the future. Prepare to learn about the growth prospects and financial performance of Tesla in this insightful video analysis. Before we go any further, though, be sure to subscribe to Wall Street Games and remember to click the like and notification bell buttons. Tesla's first quarter revenue of nearly $25 billion and net income of over $4 billion were mostly driven by the company's car sales. However, because of a sharp decline in pricing, which ranged from 20% to 10%, the net margin for cars fell to 14.5%. The EPS was $1.30, but FX currency charges are probably going to have an impact on this number. It is anticipated that Tesla would pay about $350 million in currency charges, which could lower the EPS to $1.19, given the record-breaking quarter in Shanghai. Every quarter, the number of outstanding Tesla shares will be diluted by 1%, and there won't be any buybacks in 2023. The stock presently trades for about $180 a share, has a market value of more than $700 billion, and a P/E ratio of 55. With a possible P/E ratio of 50, the stock would be valued at $204 a share and have a market capitalization of more than $650 billion. Between April 21 and July 20, if the market turns bullish, the stock may rise to a high P/E ratio of 60 and trade for between $240 and $250 per share. A P/E of 65 or 70 would be much higher, and the stock price might rise to $300 per share. However, the P/E ratio might fall to 40, and the stock price could plummet as low as $163 per share if things worsen with increased interest rates and bad sentiment. For the near term, a P/E of 45 to 50 would be more reasonable. In the second quarter, Tesla is predicted to ship about 450,000 cars, which may bring in a total of $25.5 billion in sales and a net income of more than $4.3 billion, against the impact of foreign exchange charges. We're optimistic that Tesla's financial results will keep getting better. Analysts estimate that in the first quarter of 2022, the company's net income will surpass $27 billion, with about $250 million coming from Tesla Energy alone. The bulls anticipate a sharp drop in costs, translating into an EPS of $1.29 per share and a total EPS of $4.80. Additionally, bulls think that Tesla's stock price will keep rising and may eventually reach a P/E of 70. But for Q2, they recommend a fair stock price of $228 per share and a safer P/E of 50. Although interest rates are high, the bulls do not think the Fed will hike them significantly. Due to strong demand and limited supply, they do not anticipate a price reduction for Tesla's automobiles. Additionally, the bulls predict that Tesla will continue to expand rapidly and produce 475,000 cars in Q3. They anticipate that Tesla's profits will support a higher P/E ratio, possibly as high as 70, and that the stock price will adequately represent the company's impressive financial results. In this analysis, a stock price of $240 per share with a P/E of 60 is used during a bull market. However, given the company's performance, I don't think it could surpass a 60 P/E in Q3. I doubt it will go much higher than a 65 P/E, which translates to $312. That is the highest that might occur. A P/E of 50 to 60 would make sense, in my opinion. This period runs from October 21 to January 20, which equates to 9 months. By then, I think the bear market should be over. After we're out, a 60 to 70 P/E would make sense, mostly due to the anticipated increase in Tesla's Cybertruck manufacturing. A few thousand Cybertrucks ought to be in use by January 2024, or at the very least manufactured and ready for delivery. This will be a crucial sign of Tesla's development. I would advise avoiding the bears and bulls by maintaining the P/E at 55 or even 50. However, we might see the P/E drop to 30, 35, or 40 if anything unfavorable occurs, like Cybertruck manufacturing being moved to next year or the plants in Shanghai and Berlin closing once more. Still, given the level of interest in Tesla, I think a consistent P/E of 50 makes sense. The bulls anticipate that the company will trade at 80, 90, or even 100 P/E in light of Amazon's dismal performance at 100 P/E. Their repeated missed results have led to high expectations, which compress the P/E when they beat earnings. But Tesla is a distinct breed. I estimate that 500,000 vehicles will be produced and delivered by the end of Q4. It is absurd to think that the total revenue from this output might approach $30 billion. With a net income of approximately $5 billion, this quarter would be like watching something extraordinary happen. For FX purposes, though, I will cut it down to about $375 million. Consequently, we may still anticipate net profits of more than $4.5 billion. Based on my calculations, Q4 earnings per share is expected to be $1.36, meaning that the overall earnings for 2023 will be close to $5. Even though 2023 is a recession year, there will be more than 1.8 million cars delivered overall, a 41% UA growth, which is quite remarkable. The stock price is expected to be about $249 per share at a 50 P/E. But between January 21 and April 20, 2024, I predict a bull run during which the stock price may hit a 60 P/E and trade at about $300 per share. By the end of 2023 or the beginning of 2024, I think there will be a strong bull run driven by the Fed's reversal and a lot of good news. Tesla's shares would attain a $1 trillion price at about $304 per share if its P/E ratio hits 61. However, in the absence of dilution, the stock price could soar considerably higher. Assuming that they will begin to dilute by the end of 2023 or the beginning of 2024, a 61 P/E would translate into a $1 trillion market cap. That's when I think there's going to be a big bull run that may extend till 65 or 70 years old. Moreover, I don't believe it will reach that magnitude, resulting in a market value exceeding $1.1 trillion. As a result, I think the highest it may go in Q4 2023, when the earnings are announced in 2024, is 60 P/E. Again, bear sentiment might drive it down to 40 or possibly lower. That's $150 per share, which is wonderful news if it drops to 30. However, by then, I'm sure a bull market will have emerged, and a 60 P/E for Tesla would be absurd. Between $249 to $299, or $300 per share by the end of the year, is a plausible stock price range for 2023. The cost should be at least $260. It appears to be comparable as a result. Let's watch to see what transpires. Since this is only a prediction and predictions seldom come true, please take all of this with a grain of salt and do your research. Approximately 1.8 million deliveries of Tesla stock are projected for each quarter in 2023. With an EPS of $1.19, 430,000 vehicles were delivered in the first quarter. After updating this in February and March to incorporate Shanghai's February sales data, the situation will become considerably more apparent. As previously mentioned, Tesla set a record-breaking quarter in Q1 with about $25 billion in revenue and a net income of over $4 billion, mostly due to car earnings. With a large drop in costs, Tesla energy revenues, and the delivery of Cybertrucks, it is anticipated that Tesla's net income will surpass $27 billion in Q1. While bulls anticipate that Tesla's stock price will climb further and that it may eventually achieve a P/E ratio of 70, our experts believe that the short-term P/E ratio will be between 50 and 60. In a bull market, the stock price may rise to a high P/E of 60 and range between $240 and $250 a share. But the stock price can drop to $163 per share in a bear market. We really hope that this movie was instructive and useful to you. Remember to click the like button and subscribe to Wall Street Games to receive updates on our most recent financial research. Once again, thank you for viewing and see you in the future video.